All right, we are back with another video. This time we are looking at the daily cycle sequential SMT from ES versus NQ, asymmetrical versus symmetrical. Okay, this one, daily cycle, syncs to the 15-minute chart. So we're going to be looking at everything on a 15-minute time frame. Data period is 2 years from March 4th, 2024 to March 2nd, 2026. So we are excluding quarter one, which is the opening quarter on Sunday for futures. I wasn't sure if I should have it look back to Friday Q4 or not, so I just excluded it from the data. And then also, when contracts switch every, I don't know what, like 3 months or so, we have a new contract for futures. Well, when that happens, I'm excluding the first 3 calendar days just because the data that I have from Data Bento doesn't match the trading view data, the ES contract on trading view, like to the T. You know, it for some reason it switches at a different time. It's like 48 hours or something like that. So that's why I'm excluding that first 3 calendar days after the contract roll. And so what we'll do is we are going to look at charts. We're going to look at data. We're going to look at a few examples. We're going to look at what the baseline or asymmetrical is and what symmetrical is. And then we'll go into the back test that I ran on Python for this 2-year period. And so first, just a quick disclaimer, everything I say here is just for educational research purposes only. It's not financial advice, a trade recommendation, or a guarantee of future results. Futures trading obviously involves substantial risk and is not suitable for every trader. Back-tested results are hypothetical, may differ from live execution because of slippage, commissions, liquidity, platform data, and execution rules. And so also I wanted to share what I think I'll be working on getting out in the next maybe 30 to 60 days. And it's going to be a website, pythonbacktesting.com. Okay. And what I'll have there is I'll have these PowerPoint presentations there. And I also will share the code that I use to run these back tests. That way everything is transparent. The code's open source, or however they call it as a dev when it's, people can check it out for themselves. So, okay. With that being said, let's move on to the results. Let's look at, so we got a baseline and we got symmetrical, okay? Baseline's basically, it means asymmetrical plus symmetrical trades. And so let's just look for a random one. Oop, went too far. Okay, so 66, 517, 2024, area here, 517, 2024. Okay, because I want to find a symmetrical one and then a asymmetrical one as well. So 2 o'clock, 2 o'clock. Okay, so I got 2 examples. This one is on both XLs. So this is going to be a symmetrical, and this one right here should be asymmetrical. Okay, so 517, 2024. Let's pull up the charts. Okay, so right here we're zoomed in on the 15-minute chart. All right, on the left side we have ES. On the right side we have NQ. Down here we have our daily quarters, both sides. Make sure weekly, daily. Yep, so weekly would be the bottom one. Daily is the top that we are working off of. And let's go back. Let's go back here. So we have May 17th, 2 o'clock, New York time, which will be, I am 2 hours behind. So let's find the 2 o'clock right here. And then let's go 2 hours. So 1 and 0. So we're going to be looking at, let me see if you can, am I in the way? A little bit smaller. So we're looking at this quarter right here. This is the high for that quarter, and the low here, low's right here. Yep. Okay, so we got our high and we have our low. So let's look at the data. It shows that it runs at 2 o'clock and it triggers an entry at 2:15. It's Friday. It's going to be quarter 2. And our entry is at 53.2150 with the stop loss at 53.2425. And this one, 1, 2, 3, we get a 3R on it. Okay, let's see what happens. 53.2150 should be our entry, and let's just compare it. So the next one, it should run it. Boom. All right. Okay, so it runs it on NQ right at 0. Okay, perfect. And then the next the next candle is where the trade triggers. So we're at the open here. Stop loss, 4 ticks above the invalidation. So 53.25 right there. Okay. This should match the XL. Our entry should be 53.2150 with the stop loss at 53.2425, 53.2150, 53.2425. And so it should not invalidate. Let's see what happens. We should get a 3R. There you go. So it made a 3R before it was invalidated. So I'm assuming it goes back up. So that is what the code is written for, okay? And we take the trade on the asset that does not break. And so we did break the invalidation right here, but it didn't get to the stop loss that the code has coded. So we got a 1 point or 4 tick. You see 25, 50, 75. Yeah, 4 tick stop loss. We'll go through it in the PowerPoint. And let's look at one more. Oh, yeah. This is a symmetrical setup because the previous quarter's high that was ran is the same to the 15-minute to the 15-minute candle. It's the same on both assets. Okay, it happened at 1945 right there on both NQ and ES. So this is considered a symmetrical daily cycle sequential SMT. Let's look at the next one. It's going to be same day at 7:30, and so this one is not on the symmetrical side, so it should just be an asymmetrical SMT. So 7:30, so this will be in quarter. I'm gonna actually look back at the last quarter. Let's mark out here. This is the low, and this is the high. Low, high. So 7:45 will be 5:45. So the trade shows this will be on ES again, and this one only gets a 1R. And our entry is 53.23, stop loss is 53.25. So the very next one we ran here, this would be the entry. We take the stop loss 1 tick. This should be what it's at, 53.23, 53.25, 53.23, 53.25, and should get a 1R, exactly a 1.25R. What it shows, we should get right here, 1.25R. This is the dope thing about code, is you can get insanely accurate. So again, we break, but do we break above? Oh no, look, we got it here first, and then it broke. So the code, we get the 1R that the code says we would get, and then it moves up and it invalidates. All right. Let's look at the PowerPoint. So here is the backtest logic for this daily cycle, asymmetrical and symmetrical sequential SMT backtest. Okay, the baseline will include all ES and Q daily quarter divergence setups, which include asymmetrical and symmetrical. Prior quarter extreme timing does not need to match. Okay, symmetrical are only setups where ES and NQ made the previous quarter high or low in that same 15-minute candle. Entry, divergence must hold through the 15-minute close, and the entry is the next 15-minute open. Risk, the stop loss is beyond the non-breaking symbol, so the symbol that created the failure swing prior quarter extreme, and the stop loss has a 4 tick stop on ES and a 12 tick stop on NQ. And the cycle is the daily cycle. There's 6 daily quarters in a day. And this is the daily. So I'm not going to go through all of them, but quarter 1 on Monday starts on Sunday when the market opens. So you got 6 to midnight. This is all New York time. 6 p.m. to midnight. 12 a.m. to 6 a.m., which is going to be your Asian. and then 6 a.m. So you got the New York morning and then the New York afternoon. So the code doesn't look at this quarter. Quarter one, which is that opening, that first 6 hour block on Monday. I just wasn't sure if I should have it look back at Friday. And since I wasn't sure, I just excluded it. Okay, total trades that the code found for the last 2 years is 1,114 trades. And of those, only 616 matched as a symmetrical daily cycle SSMT. 1R hit rate on asymmetrical and symmetrical is just about 44%, and just a little bit higher adding the symmetrical component. Daily candle weekday comparison. So each day, Monday has a little bit less trades than the others because it's missing that first 6 hour block. And it looks like the best day from the data. So you have your baseline, which is the asymmetrical and symmetrical, versus your only, all the SMTs having only that symmetrical component to it. And it looks like Thursday had the best improvement. Wednesday looked pretty good. Thursday had the most improvement from symmetrical versus just the regular baseline. All right. And that was just over 50%. So, I mean, to me, in my opinion, anything under 50%, you might as well take your money and go to the casino, especially for a 1R. Okay. And then we have the 2R over here, 3R here. And the delta is obviously the difference between the baseline versus the symmetrical. And then we have the daily quarter comparison. So most trades happened in quarter three, which probably isn't surprising. And again, nothing, for the 1R, both baseline and symmetrical were under 50% hit rate. Best and worst baseline windows. So we got Wednesday, quarter two, 60 trades, and it shows 55% probability for a 1R and 40% probability for a 2R. Pretty decent. And then the worst quarters down here. Okay, best and worst symmetrical. What was it for? Oh, okay. So it's Wednesday Q2 for baseline, which includes symmetrical. And then for symmetrical alone, it looks like Monday Q2 was the best, at least all around. So the score, it takes the average. Takes the 1R, 2R, and 3R, and then puts an average there. So 48% for a 1R, not good, but 45% for a 2R, that's playable. And then you can check out the rest of these. 54% on Thursday, Q2 for a 1R, but then doesn't look likely that it'll run to a 2R. Okay, summary. So the symmetrical filter, I don't think, in my opinion, added much of an edge. At least when it comes to looking at ES versus NQ. I know a lot of days concepts in quarterly theory look at a trio, which is NQ, ES, and YM together. Okay, so that is what I'm working on next, to put that together, and we can back test it with the data and see if it stands up. Okay, so for the next video, that's what you can look forward to, is testing all three assets and seeing how it works out. So that's all I got. Remember, next 30 to 60 days, I'll be launching that website, pythonbacktesting.com. That's where you're going to be able to go and see these PowerPoints, the Excels with all of the data, and you're going to be able to check out the actual source code that I use to run these tests. Okay, so full transparency, it'll be on that website. Looking to build it, just need a little bit of time. I'd say about 30, 60 days, that should be up and running and live. Till next time.